Hey everyone, happy dog days of summer. It is, getting to the end of August here, and I'm noticing that folks are coming back to town, which I think is having an effect on our market. So I've got the latest market statistics for the week of August 9th through 15th. So that's the most recent complete week of statistics. And we noticed something that seems to be looking a little bit more like a trend, like maybe, so I'll start from the beginning, which is back in March, we started to see a very slow incremental rise in the number of active listings. So our supply of homes was increasing. It wasn't very noticeable because we had such a huge pool of potential buyers. Our demand was really high. But we kept watching week after week after week, slow, regular, incremental rise in the number of active listings. Not too surprising, that usually happens during spring. That's when most folks put their homes on the market. But we could see that the demand wasn't quite keeping up with the new supply of listings, which, was perfectly fine with me because we had way too few homes for the number of buyers that we were dealing with. Then summer hit and we started to feel a little bit of this summer slump. And we've been talking about this since about March, April. I've been advising my clients who are getting frustrated with the market in the first couple of quarters of this year to say, hey, there may be some opportunities in July and August because kids come out of school. This is something that's kind of been happening nationally. We had a combination of buyer fatigue, number one, and then number two, caged animal syndrome. Everyone been cooped up for more than a year. Things are opening up and folks were heading on vacation. I've been seeing that with the agents that I've been calling on transactions I have. Like half of them are either in Hawaii, Mexico, out at the coast, camping in the hills or something like that, or at a lake. So folks are on vacation a lot. And I think that did have an effect on our market, gave us this summer slump that we've been dealing with. Not that the numbers are terrible. I mean, the numbers are still heavily in seller's market territory, but it wasn't like it was in the first couple of quarters. So anyway, we've noticed in about the last month that the number of active listings has more or less leveled off. We kind of had a big jump in the active listings sort of after the July holidays. And then those numbers backed off a bit. A lot of those listings went under contract. And for the last couple of weeks, we've seen very little change. It's been very steady, the number of active listings. In addition to that, the number of pending listings we've had has been also very steady. And the number of new pending listings has been quite strong. So it's been a little higher, towards the higher end of what we've been seeing so far this year. That coupled with a couple other things, we saw the days on market decrease just a little bit. For a little while it was increasing there, just ticking up, a day here, a day there, and it seems to be ticking back down. And then the other thing that we saw is that percentage of sale price versus the original list price. So they listed the property at $500,000. What percentage of that did the property end up selling for? And so we're seeing, like 103 at one point up to 105% when we're talking about the average. So we think that, we're watching it kind of slowly reduce from 105, 104, 103. This last week it was towards the low 102.2, and we saw that number rise again. So it could be that we might be hitting the bottom of the market as far as this increase in the number of active and the decrease in the number of pending transactions and the number of closed transactions. The other thing is, just boots on the ground sort of stuff. Last weekend I did feel on the market an increase in the number of buyers who are out and the number of showings that we're getting on our listings. So that's something that we'll be monitoring going forward and seeing if this holds true or not. My suspicion is what's going to happen is that we're going to have folks coming back to town as kids go back to school. There's going to be re-energized interest in buying real estate as folks get back to town and they're done with vacations and that sort of thing. At a time when we're seeing fewer listings hit the market because going into fall and winter and the holidays, we have a much lower number of new listings hitting the market versus what we have in the first couple of quarters of each year. So replenishing our pool of potential buyers with more and more buyers at a time that we have fewer and fewer new listings hitting the market. And that may send us back towards another sort of lighter version of what we experienced, that insane frenzy of the first couple of months of 2021. We may see a lighter version of that in 2022. So that's what we think right now. We'll just watch the market and let you know if that holds true or if we start to see different trends. All right, all real estate is local, as I always say. So if you're curious about what's going on in your specific neck of the woods or in your property type, condominium, single family home, 55 plus community, whatever it happens to be, just let me know. I'm happy to get the numbers for you, and we'll see you next week.